Imagine opening your investment account. You expect excitement. You expect action. You expect secrets. Instead, you find a list of companies you've heard of before. Nothing flashy, nothing mysterious, nothing that sounds like it will make you rich overnight. And yet, some of the wealthiest people in history built fortunes this way. That raises a strange question. Why do rich people love boring investments? The answer begins with a simple fact. Most people dramatically overestimate what they can achieve in 1 year and dramatically underestimate what they can achieve in 20. Human beings are naturally attracted to excitement. Our brains evolved to notice change, movement, danger, opportunity. Psychologist Daniel Kahneman spent decades studying how humans make decisions. He discovered that people often rely on mental shortcuts. These shortcuts help us survive, but they can also lead us into costly mistakes, especially when money's involved. Imagine two investors. The first investor spends every day searching for the next big thing, a new stock, a new trend, a new prediction. The second investor buys a simple diversified index fund, then waits. One strategy feels productive, the other feels boring, but feelings and results are not always the same thing. In 1976, John Bogle introduced the first retail index fund. The idea sounded almost ridiculous. Instead of trying to beat the market, own the market. Many experts laughed. Some called it average, others called it lazy. But something interesting happened. Year after year, many actively managed funds failed to outperform simple index funds. Not because professionals were unintelligent, because the challenge was extraordinarily difficult. Every trade involved costs, taxes, fees, mistakes, emotions. The market quietly punished unnecessary activity. Meanwhile, patient investors kept compounding. Compounding is one of the strangest forces in finance. A dollar earns a return, then the return earns its own return, then those returns earn even more returns. The process starts slowly, almost invisibly, then it accelerates. Albert Einstein is often credited with calling compound interest the eighth wonder of the world. Whether he actually said it remains debated, but the idea captures something important. Compounding rewards time, not excitement. This is one reason billionaire investor Warren Buffett became famous for patience. A large percentage of his wealth arrived later in life, not because he suddenly became smarter, because he stayed invested longer. Most people focus on getting rich. The wealthiest investors often focus on staying invested. There is a difference. History offers countless examples. The technology bubble of the late 1990s, the housing bubble before 2008, the cryptocurrency booms and crashes. Each period created stories of quick fortune. Each period also created painful losses. Why do so many people keep chasing excitement? Because excitement feels like progress. Action feels productive. Waiting feels passive. But investing is one of the few activities where doing less can sometimes produce better results. That feels unnatural. Our ancestors survived by reacting quickly. Modern wealth often grows through doing the opposite, ignoring noise, following a plan, allowing time to work. Researchers have found that frequent trading often reduces investor returns. The more decisions people make, the more opportunities they have to make mistakes. A boring portfolio removes many of those opportunities. That is not exciting, but it can be effective. There is another reason rich people love boring investments: predictability. No investment is guaranteed, but diversified investments spread risk across many companies and industries. A single company can fail. Entire economies can struggle, but broad ownership reduces dependence on any single outcome. This approach rarely creates dramatic headlines. Nobody writes news articles about patience. Nobody celebrates someone who quietly invested for 30 years. But that is often how wealth is built. Slowly, consistently, almost invisibly. Then one day the results become impossible to ignore. The strange truth is that boring investments are not really boring. They represent ownership, innovation, products, human progress itself. Every year, millions of people search for the next financial shortcut. Meanwhile, many wealthy investors continue doing something surprisingly simple. They buy, they hold, and they let time do the heavy lifting. Perhaps the biggest investing secret is not finding something extraordinary. Perhaps it is learning to trust something ordinary for an extraordinarily long time. Imagine opening your investment account. You expect excitement, you expect action, you expect secrets. Instead, you find a list of companies you've heard of before. Nothing flashy, nothing mysterious, nothing that sounds like it will make you rich overnight. And yet, some of the wealthiest people in history built fortunes this way. Compounding rewards time, not excitement. Most people focus on getting rich. The wealthiest investors often focus on staying invested. There is a difference. Slow growth often beats exciting mistakes. Time is doing most of the work. The market quietly rewards, while excitement often demands action. Action is not always progress. Waiting is not always passive. Wealth often grows quietly, almost invisibly. Then suddenly everyone notices the results. Perhaps the biggest investing secret is not finding something extraordinary. Perhaps it is learning to trust something ordinary for an extraordinarily long time.